Welcome to this channel. In today's video, I am going to be explaining some basic trading tools, and I'm going to be using a pair, the NZD/USD, to explain these tools. Now, these tools I'm going to be talking about today is, for example, the Fibonacci Retracement tool. I'm also going to be talking about trend lines and channels, and I'm also going to be looking at a major reversal pattern, which is the head and the shoulder pattern. So great news for you if you didn't understand all of this when I was explaining the previous videos. So I'm going to be using a live example to explain these three concepts: the head and shoulder pattern, trading with Fibonacci retracement tools, trend lines, and channel. So, and this is also going to be an opportunity to look at a weekly outlook. Which I'm going to tell you this pair, a featured pair for this week, which I'll be looking at trading this week. Now, you don't need to trade all the pairs you come across in the market. You don't need to trade. You don't need to be on the lookout for different setups. Now, only one perfect setup can give you all your net earnings you need for the month. For example, myself, last week I only traded NZD/USD. I also traded GBP/USD, and I made a lot of profit. I made almost 400 pips net in profit. I mean, I made some losses, but my net profit was about over 400 pips. So this week I'm going to be showing you what the NZD/USD is going to do. But remember, nothing is certain. Always use a stop loss. So, but this is a very good setup, which I am very confident to play out. So stay tuned. Before I go on, make sure you hit that subscribe button if you haven't done that, and hit the notification icon so that you get notified when I release more videos. I'm going to be releasing more weekly outlook frequently now. Maybe every weekend I'm going to look at different pairs and then tell you what they are going to do in the course of the week. So without wasting much time, let's quickly go ahead to the topic of today. So if you look at the NZD/USD on the daily time frame, you're going to see this. Let me zoom out a bit. You can see price was coming from an uptrend. Remember, the head and shoulder pattern is the reversal pattern. Head comes all the way, coming from here, and then hits this zone, which remember, I always see a support and resistance as not a line but a zone. Hits this zone, comes down, and then breaks through the zone, and then this zone now serves as a major zone. So I'm going to mark that out with my tool. You can see this particular zone here. So remember, in a discussion, what we call this zone right now, is the neckline. It serves as a neckline. You can see price then goes up, forms this left shoulder, comes back to that neckline, hits, goes up, forms the head, which was a perfect W formation. Comes back to that neckline, hits, goes back, and forms the right shoulder. So what do? You mark this out. Mark your shoulder, your head. Don't worry, you're not late to the party. I'm sure some people will say, "Oh, this has gone too far. I missed this setup." It's fine. It hasn't gone too far. So you can see the shoulder, head, and the shoulder, and then the neckline. So what are we? Let me take you to when that trade was called. Here, some of us got it right from you can see this image before the whole thing played out. Some of us got in right on that right shoulder and are holding with a lot of pips. So, but it's not too late. So you can see this pattern, good head and shoulder pattern. Remember when I explained in the video the perfect entry. Now I can say all we got was a sniper entry. Some of us got it from here. Was a sniper entry. Some of us got in right on that right shoulder with a sniper entry. Now, but there's also a safe entry, and I always say safe entry is actually better than sniper entry. What is a safe entry? Safe entry, what happens when price breaks through this zone, this neckline. When price breaks through, does a retest, and then bam, we're going to see it go down for that down. So that is a safe entry. So if you are holding this sell, your take profit one should be here, while the second profit should be a measured move. Now measure the total pips from this head to this neckline, and you can use that to aim from when this neckline is broken. That will be an equal amount of take profit we should be looking at. That's going to be a lot of pips. That should be almost 200 pips movement. I can't do the math right now because I want this video to be as short as possible. But distance between this and this, you can use that to aim when this zone is broken, and wait for that retest to happen. Do not rush a trade. Once that happens, bam, go all the way and ride this to that number of pips. So guys, that's the head and shoulder pattern for this particular pair, and so we're going to be watching how that plays out. So quickly, let me go on to another time frame. Let me go to the H1 time frame. Now Fibonacci 2, let me delete this. Now this happened last week. This M formation happened and price came all the way down here. Now when price has done this sort of run, like a bearish run in this case, there is going to be a pullback at some point. Price is going to take a breath. Remember, if you are in a bus going from Lagos to Benin, the bus is definitely going to stop somewhere, or you're going to Enugu, wherever you're going to, the bus is definitely going to stop somewhere, take a break, maybe buy fuel and all. So you catch that. If for example, those that missed this setup here, let me look at, you can see from here, some of us were holding this position. So those that missed this particular setup could have actually gotten in when price takes that break. So this was what I shared on the group, on our group chat. Now we're going to also draw this Fibonacci 2. You can see here, and I marked out the 61.8 zone clearly and waited for a sell there. So you can come here and then add your Fibonacci 2 here to the point where this retest, where this happened, the last high, which is this, and you can see the 61 level, bam, it held, and price came all the way crashing from there. You can see what happened. So from this particular level right now, those that caught this when I called for a sell here, they are in profit of I think about 60 pips right now. Some sold here, and boom, it has gone all the way 60 pips. So that's it for the Fibonacci 2. Simple to use. Wait for pullbacks to happen. Draw your Fibonacci, catching 60. I trust the 61.8 level very well. That's one of the best levels I think is always holding. So I don't use the 50. I don't use the 38. I believe the ratio of 61.8 holding is far more. I'm more confident with that. So guys, that's the Fibonacci Retracement 2. You can also use it in a bullish run, just vice versa. So let me go to the H4 and explain the last setup which I have for you, which is using the trend line and in a channel. You can see, if you look very well, you see that this pair has been in a channel here. You can see this. You draw your trend line to connect the two lows, this point, which is this point, and this point, and then we're going to draw another the upper trend line, which is here. Now the price gave, this is what we call a fake breakout. Price gave a fake breakout here. So if you look at this, you're going to see you have a channel. You'll see you have a channel. I don't bend my screen, so you don't have to bend your own screen. I believe you can see this very well. So price will hit this zone, this up lower trend line, and we might see a rejection. Price might go up a bit again after hitting this particular, the lower trend line. But overall, I am very bearish on this pair. So I'm going to be looking at price breaking out from this lower trend line, a retest, and more opportunities to go down. So guys, that's it. I think I've explained all three concepts here. Trend line, 4 of them. Trend line, channel. This is a channel. This is when you say price is trading in a channel. It's a channel. You can see hits up, almost hits up, hits here, and then down, back up, and then coming back down. So that's it. Remember guys, the US election is very close, so this is going to have a lot of impact on the US dollar. I advise you to trade carefully, stick with your trading plan, and always apply proper risk management. So that's it. If you have any question, do not hesitate to ask. If you won't have plans, if you want to join us on the group on Telegram, please hit me up in the comment section, and I'm going to right away. Send you the link to you. Remember, once again, subscribe, smash that subscribe button. Thank you very much, and to stay safe. Bye.